Wait, can you guys hear me? Am I sitting here chewing my gum? Oh my god. I don't know what I'm doing. Hang on. How do I share my damn screen? Hopefully this clonazepam is gonna kick in fast. All right, can you guys hear me? Can somebody type if they can hear me, please? All right, thanks. Now I'm gonna wait a few more minutes for others to hop on. Simba, you wanna come up here, talk about your new crypto stuff? Do you guys know that Tradeify dropped crypto as well? All right, I'm going to get started in a few minutes. Okay, I'm trying to create a giveaway from Tradeify since Brett Simba is listening in. Let's see. Let's do a growth account webinar. Okay, so I'm going to do it through Gleam. And basically, you guys can click on that. Okay, today is the 16th. To enter. And then at the end, I'll just spin that wheel and then it'll pick the winner. But you must be on to claim it. Let's see, let's expire it. Central. Two p.m. 3. Okay, hang on, guys. Update competition. Okay, so let me show you guys how this looks like. So this is the competition. And on your mobile, if you're on your mobile, it's going to look like this. Scroll all the way down where it says login. So log in with like Gmail or your email, whatever. And then you can, there's different ways to enter. So the more that you click on, the more chances you have that you'll win. This is what it looks like on the website. And then at the end, I will spin the wheel. So let me copy and paste. All right, so this is for a 50K growth account from Tradeify. Let me open Twitter. I posted in the chat. Okay, there you go, guys. I posted it um, in the chat. All right, I'm gonna go ahead and get started. If you guys want to follow along, go to propfirmtrend.com and you can click on the trading resources and then click on the futures trading basics. So those of you that are new or new to futures trading, basically this is going to be kind of like a short master class about trading futures. So everything you need to know how to trade futures will be in here. And if you have been trading futures for a while, then this is probably a refresher. I will say that, and this includes myself, most of the time when we blow through evaluations or through prop firm accounts, it's because of our sizing. And this is something that I feel like when people start trading futures, they go for the minis instead of the micros. So it's kind of like if you were trading options. And the first time you trade options, you are trading SPX or NDX instead of, SPY or QQQ. Um, oh, sorry, guys. Can you guys please not tag me while I'm doing this? Because then I get my little brain gets a little distracted. I will do a technical analysis session soon. Yes. Um, but I will also not look at the chat anymore so that I don't get distracted. And then at the end, if you guys have any questions, please feel free to ask anything. There is no dumb question because we've all been there before where we didn't know what how to size for contracts or anything. It doesn't matter. No question is a dumb question because if you have it, somebody else might as well. So, okay, let me get started. Okay, so kind of get through this fast and then I'll go in and compare to show you guys different types of plans of different prop firms, different account sizes, all of that kind of stuff that I feel like a lot of people missed. I will also say that, you know, owning a Discord, and I've been trading. I actually started trading futures in 2022. I used to trade small caps back in like 2020 and 21, and then went over to options, where in options in 21, I lost over $234,000 of my own money. And when I discovered futures at the time, there weren't very many people that were trading futures. A lot of it was trial and error. And there weren't very many prop firms either. So it was basically, it took months to learn, a lot of money blown, where I could have, if I had something like what I'm doing right now, um, it would have been a lot easier to save some headache and also not build really bad habits. I think that's what starts happening when we start trading something. We tend to build bad habits, and I've been teaching these futures basics for the past, I guess, since 22, just so that you guys don't repeat the mistakes that I did. And some of the people that I brought over from options, we all were full partying and doing all crazy shit because we didn't know any better. No one was at the time was there to tell us, hey, you're going to develop a bad habit if you don't stop doing that. So Futures 101. So basically, futures trading is a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. So, how do we trade them? There are two participants in futures trading. There are hedgers, those who protect their assets from risks, like farmers locking in crop prices, and there are speculators. So, usually floor traders who profit from price movements. So, as retail traders, we are considered speculators. Futures contracts are available in different assets such as equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Typically, it's on a third Friday of every third month if you're trading S&P 500 or NASDAQ. So they expire quarterly, which is March, June, September, and December. Again, it's on a third Friday of every third month. If you're trading metals, like metal futures, or if you're trading commodity futures such as oil, currency, interest rates, those type of things, they expire monthly. Now, typically your broker, if you're trading with, let's say, NinjaTrader or Trade of 8 or whatever you're trading with, AMP, they will alert you or prompt you to roll over your contract. So you can kind of see this little example. It's going to roll that over. I see a lot of people trading wrong contracts, especially the monthly ones. So actually, just the other day, someone was talking about, a spread being $50 apart on gold. Well, they were trading the February contract, and there's no liquidity there because at this point we're already on the April one. So it's very important that you guys, if your broker or whatever you're using does not prompt you, that you need to know when these futures or when these contracts expire so that you are on the right contract. Otherwise, you're going to be basically, the spread is going to be $50. You're going to lose as soon as you get in, you're going to lose money. So that's something that I feel like it's not talked about as much. So some of the key terminologies that are used in futures trading is basically lot or contract. It's the unit of the instrument. Tick is the smallest price movement that a futures contract can make. Point is a $1 move or one handle. Globex is an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean overnight sessions. If they're trading, I don't know, at 8 p.m. at night, they're like, oh, I'm trading Globex. And then the RTH is the regular trading hours for a specific exchange, which typically, we call that during the New York Stock Exchange open. Margin is the amount of money required to be deposited by a trader to open a futures position. Let's see. So the most often used futures are ES, MES, which is basically kind of like SPX and SPY, NQ, MNQ, NDX, and QQQ. If you're trading RTY, it would be like IWM. Oil, CL is for oil, and GC is for gold. Now, these trade in a manner more akin to shares than options. There's no theta, there's no IV. Stop losses can be placed at precise price points. And each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. Now, micro E-minis are 1/10 as small as E-mini contracts of the same type. So to provide an example, S&P 500 utilizes a $5 multiplier, whereas the E-mini version employs a $50 multiplier. Hang on just one quick second. I just want to make sure I didn't lose you guys, because it's happened where I've done webinars and at the I finished the whole webinar and it like stopped 20, 30 minutes into it. So I just want to make sure. Okay. Alrighty. So, first off, the market is essentially futures. So we frequently discuss, like I said, S&P 500. So futures trading is simply a very leveraged form of stock trading. Okay, so to contrast the futures, futures contract offers roughly 32-to-1 leverage. So because ES trades in ticks, which is aka 0.25 spread, one contract changes value by $12.50. For every 0.25 it moves. You gain or lose $50 when ES moves 1 point or $1 or one handle, whatever you want to, you call it. If ES changes 10 points, you either win or lose $500. So if ES is trading at 7,000 and it goes to 7,010, so there's made a 10-point move, each dollar or each handle is $50. So now the 10th of an ES contract is an MES. So basically, instead of the $50 per point for ES, it's $5 for each point on MES. So it's just a tenth of the same stuff. Now, many new traders, like I said earlier, jump straight into NQ or ES, thinking they're just trading futures when the risk is equivalent to trading the full index value. They don't realize that trading NQ is like trading NDX. Trading ES is more like trading SPX if you're an options trader. Instead, most traders should be trading MNQ, which is basically like trading QQQ, or trading MES, which is more like trading SPY. So one NQ contract moving 50 points is $1,000 gain or loss. Whereas if you're trading the micros, it would be the 1/10. So the bottom line is, don't trade NQ when your account size says you should be trading MNQ, and don't trade ES when you should be trading MES. I am personally guilty of using minis, especially when I first started out, and that is like I said, we didn't at the time, we only knew ES and NQ and that kind of thing. So we never 4 years ago, no one was there to say, hey, you know what, size down and use these little micros. So to kind of give you ES and NASDAQ or NQ, there's 4 ticks in each point. So for each dollar that it moves, 4 ticks, that's that minimum price movement. But if you're looking at CL or oil, it changes value by $10 per tick, or $10 per 0.01. So each penny is a tick, and it's worth $10, which is basically $1,000 per point. So if oil is trading at $60 and it goes from $60 to 61, so that $1 move is actually $1,000 per point. And same thing, if you're trading gold, we've seen over the past couple of months, people started jumping into gold and silver. A lot of people either lost their accounts, blew their ports, and some actually, they did make money. But it happened to be very volatile. So the volatility sparked some changes within different prop firms, but let's see. Let's get to, all right, so trading futures. So futures market is open 23 hours a day. Basically, you must close out your position by 4:59 p.m. Eastern if you're trading on, prop accounts. Also, each firm has its own specifications. Some allow you to trade up to 4:10 p.m. Eastern. Others will let you trade until like 4:45. So just kind of check the rules. It opens Sundays at 6 p.m. Eastern and closes Friday at 4:59 p.m. Eastern. Also, you want to check during the holidays, as the hours may vary. So for today, during the President's Day, futures opened last night at 6 p.m. and it closed at, hold on a second. I did not trade today. So it closed at 1 p.m. Eastern. Some were actually closed at a different time if you were using like Project X. So I want to kind of check on that. But it's going to open back up at 6 p.m. tonight. So that's kind of it does not follow the same schedule as the New York Stock Exchange. So right here, we've got the comprehensive futures contract specification. And basically, as you see here up on the top, it says S&P 500, which is, ES, and it tells you a little minimum tick is 0.25. What the tick amount is, $12.50. Kind of a daily move. You can also see underneath, it's got the micros. NASDAQ moves $20 per point or $5 per tick. Now, if you scroll down, like I said, oil, is 0.01. So 1 penny is $10. And, silver Silver is the one that was I had a love and hate relationship with over the last month. That one, the minimum tick is 0.005, and it was $25 per tick. So um, it was an interesting thing to trade, nonetheless. So now there are three different ways of getting of trading futures. So I'm going to go over different ways. So first, I'll talk about you can trade with your own broker. So if you want to trade with your own capital, you might want to trade with micros, which roughly cost like $2,300 for an MES lot, or about $23,000 for one ES lot. And that's if you're using like IBKR or TOS. You want to check with your broker how much capital you would need for these. Second way is if you utilize a broker or you use a broker that specializes in futures, such as NinjaTrader or Trade-O-Vate. AMP is another one. So instead of $23,000 for the traditional broker for an ES, they opt. So Trade-O-Vate and NinjaTrader and AMP offer a $500 to $1,000 day trading margin for E-mini contracts. Micro contracts are even more affordable, which MES costs only $50 for the day trading margin, and MNQ is $100. So this is for day trade margin only. Let me go ahead and kind of. So Trade-O-Vate offers reduced margins for both the day session as well as the overnight session. If you see here where it says day margin and then next to it it says initial margin, so the reduced intraday margin is available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So for an ES, it's $500. For an NQ, it's $1,000. If you are a swing trader and or you want to hold over the weekend, then you would need the initial margin, which is the one on the right, where for NQ it's $33,000. If you're utilizing the micros, it would be like $3,300 for MNQ, but the day margins are $50 or $100. So for me, as a scalper, as a day trader, I can utilize this day margin. There's no PDT, so you can actually open and close positions, throughout the day. Um, close my position by 4:45 p.m. and I can reopen it back up at 6 p.m. when so basically for an hour and 15 minutes, I don't need to utilize if I close in positions, I don't need to utilize this initial margin. But if I wanted to hold through that hour and 15 minutes, then I would need to utilize the initial margin. So, and the third way of getting funded is through prop firms. So I know you guys have heard about that. Some of you have traded it. Some of you are trading. That basically you utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, My Funded Futures. There's many others. Lucid is another one, but I'll kind of use Tradeify as an example here. So Tradeify has a 1-day pass, whereas Top Step has a 2-day minimum evaluation where you can be funded, in as little as 2 days. However, if you are trading with Take Profit Trader, it has a 5-day evaluation, but they have daily payouts. So each firm has different types of accounts where you can, figure out what works best for you. So how this works is you basically demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a SIM. And if you succeed, you will then be given a SIM funded account to trade with. You will pay the activation. Also, some firms don't have an activation. It just depends on the accounts and prop firms. But this right here is from Apex Trader Funding. You keep all of the proceeds up to $25,000. And then you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So you want to check with the prop firm rules for whatever prop firm that you're utilizing, but some people will get multiple accounts, one on discount, so that you could trade them at the same time. There is a trade copier you can use, but you need to know that each account must pass the performance evaluation because they're all standalone accounts. Now, is this too good to be true? Not really. Most traders fail due to lack of discipline, and this is how these companies make money. So 95% of traders fail, whether you're trading options, um, crypto, equities, futures with your own money. It, you know, I see this on social media all the time. Oh, these, prop firms, they're basically, it's like they're prop firms did not invent losses. That's just the part of the game. The market is like that. 95% of traders fail. So, however, if you can trade the chart, you know, um, stay disciplined and consistent, then you're going to make money. Um, you need to be consistent. So the worst that can happen is you lose your account evaluation fee. You don't pay back any capital. And you can also take these evaluations a lot of times, or as many times. It's not just once and that's it. In addition, you can also trade your own capital with prop firms because of the trade copier. So in my opinion, if you just want to test it out, although they have tight regulations, I would say a prop firm would be um, probably the best because you're essentially forced to have good habits by their rules. Um, and if it's $50 or $100 for an account, that's all you're going to lose compared to if you put a couple of grand in your own account and you're learning with that, you're most likely gonna lose it. So, um, okay, so this here is from Take Profit Trader, but basically, why prop firm versus trading your own money? And simply put, most traders are undercapitalized, and you level the playing field by using the prop firm accounts, not your own funds. Trading your own funds can lead to severe losses. However, with the prop firm, your losses are limited to the associated challenge fee. Also, lack of discipline haunts traders, and the risk management system and rules will make sure that you stay disciplined during the trades. Also, all of the technology, account setup, market data, all of that is provided with it. Now, there's a few different so understanding drawdown. So there are 3 different types of drawdowns. And basically drawdown is the maximum loss you're allowed to have before your account gets breached. And understanding how it's calculated is crucial for risk management and choosing the right prop firm. Okay. I feel like a lot of people don't understand these. But I'll start with the intraday trailing. So basically, with your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets to the daily starting balance each day. So, for example, for a 50K account with a 3K drawdown, let's say you start at 50,000, your drawdown is 47,000. At 10 a.m., you make $500 profit, so now your balance is 50,500. Your drawdown moves up to 47,500. Let's say at 11 a.m., you make another $300. Your balance is 50,800. Your drawdown moves to 47,800. So it trails, right? Now let's say at 1 p.m. you open position with $600 unrealized gain, which you're at 51,400 unrealized. Now your drawdown moves up to 48,400. It trails unrealized gains. So let's say at 2 p.m. you close the position for $400 realized profit. Now you're at 51,200. Your drawdown is still going to stay at 48,400. It's not going to go back down. And then at 3 p.m. you lose $400. So that drawdown is not going to go down. Your remaining drawdown is $2,400. So your next day resets to available drawdown of $2,400. Second way is the end of day trailing. How does that work? Basically, your drawdown limit only moves up based on your ending balance at the close of each trading day. So, for example, a 50K account with 3K drawdown, your day one starts 50,000, your drawdown is 47,000. Total drawdown available 3,000. During the day, up to you go up to 51,500, then down to 50,800. Your drawdown is going to stay the same all day. It's going to be at that 47,000 all day. It's going to stay fixed, so it doesn't, move or change. So day one closes 50,800. Your drawdown updates to 47,800. And then, your day two starts at 50,800. Now, I do want to go back to the intraday trailing. Majority of the time, when you meet your drawdown, um, so drawdown or your threshold, I should say. So when you, in this scenario, it's $3,000. So if your balance goes to 53,000 plus 100, then it stops to trail. So it becomes static. So if you went up to, let's say, 60,000 and then lost, I don't know, 6 grand, you would still be okay. You're not going to breach your account. So that trail does stop when you are in a SIM funded account. Um, some of the firms don't have that during the evaluation, so you want to pay attention to that. And then the third one is called a static drawdown. So your drawdown limit is fixed based on the starting account balance and it never changes. So same scenario, 50K account start, drawdown is 47,000. Week one, you grow to 55,000, drawdown stays at 47,000. Month one, you grow to 60,000. Your drawdown is going to stay at 47,000. Month six, your account is up at 75,000. Your drawdown is still 47,000. However, reality check, you can lose $28,000 and still breach your account. So that one is more of a it kind of mimics your own personal account. This right here is just, I'm going to show you guys how these platforms look like. Project X platform looks more like a TradingView. Pretty simple. If we're going long, you would either, join bid or buy market. If we're going short, you would sell market or join ask. Flatten all is to close out all of your flatten out your positions. Up here you would obviously input your instrument, whether it's NQ or MNQ or whatever you're trading. So next one is, this is NinjaTrader platform. So I use NinjaTrader just because I use order flow footprint. With that said, same thing. If we're going long, it's buy. If we're going short, we're gonna sell. One thing I do want to mention, and I think it's very important, is to have a hard stop loss. Figure out whatever that is, because not everybody trades the same way. So, for example, for me, if I have a at least 1-to-1 risk to reward ratio. So if my take profit is, for example, 10 points, then my stop loss is going to be 10 points. And I always try to go for more than 10 points, if I'm scalping. So I could get 10, 20, 30, 40 points in a trade, but I have a hard stop loss. Now, it could be, again, you want to check your just the way you trade. Some people have a 30-point stop loss, but they're also going to try to make at least 30 points, 50, 100, whatever it is. So the reason why I always say is to have a hard stop loss is because we've all seen it. While we're in a trade, news will come through and it will wipe, it'll go like 100, it could be 100-point candle within milliseconds. By the time you think about closing out your trade, it's too late. So if you get wicked out, you know what? So what? You can always re-enter your trade. However, when a 100-point candle comes through and your drawdown is basically your stop loss, that's not, you don't want to blow your account because you didn't have a hard stop loss. You can trail your stop loss. That's what I do. A lot of times I'll have it, I'll put in a stop loss, and then if I have runners left, I'll just trail it. I'll move it, and that's the way I trade. Let's see. This right here is from Tradeovate, prop firm. Same concept, guys. Buy bid, buy market, sell ask, or sell market and sell ask. Here where it says ATM, that's where you would input your stop loss, and it's in ticks. So just kind of calculate that and just go over. You can always, like I said, move your stop loss while you're in profit to trail it, but just do yourself a favor and have a stop loss. So basically the key points here is, if you know how to chart, if you're charting SPY or QQQ or NVIDIA, Apple, whatever it is that you're using right now, whether you're using Fibonacci's, moving averages, pivots, that is going to work with trading futures. So it's not like you have to learn a new form of charting or anything like that. And let's see. Okay, so I'm gonna actually go into some, just to kind of show you guys. Oh, so every day I do want to point this out. Before I take a trade, the first thing I do is I check the trading economics calendar to make sure there aren't any news that are coming through. Some of the big events like CPI or FOMC. Some firms will not let you be in a trade during that. Some will let you be in a trade, but you must close it a minute before or open it a minute after. Others will. You just want to check on the prop firms, and so it's important that you're not trading during, red event or calendar when you shouldn't be. A lot of firms do allow the news trading, but just want to throw that out there. Another thing is earnings hubs. So if you're trading NASDAQ, and we've got NVIDIA or Microsoft or some earnings at the end of the day, you would want to know about that because it will have a direct impact. And then also, check your news feeds. Go to Barchart, Benzinga, Financial Juice, whatever it is, to look at the real-time financial news aggregator. It's going to deliver market updates. It's important to be up to date with macro. And another thing, like when I trade NASDAQ, I have the Mag 7 up, so I've got, Microsoft, Apple, NVIDIA, those up, so I can see, what the sentiment is with the tech stocks, and that's what basically drives the direction of, NQ. So here I'm going to go through. So let's pick Tradeify, and let's pick Top Step, since where is Top Step? All the way in the bottom. Okay. All right. So you can compare. So on this website, you can actually compare different prop firms with their specific plans and see what is, the best deal for you. There are over 21 prop firms. I am more inclined to trade with the ones that have a little star next to them. I think there's about 8 or 9 of them. The rest are for, comparison purposes. So let's say Tradeify growth, okay? And Top Step, let's do the no activation. Okay, V and Tradeify has so here you can actually put in the discount that they have, which is 40%. So with growth, you can, if you scroll down here, look, both of them have a profit target of 3,000. Okay, drawdown is 2,000. End of day for both of them. Now, with Top Step, there is a 50% consistency, and I'll show you guys what that means. With Tradeify, there is none. However, once you get funded or SIM funded, there is a consistency in Tradeify but not in Top Step. Okay. And it basically tells you, what the profit split is, which they're both similar, what the minimum payout is, that kind of a thing. And you can compare, $83 for Tradeify for the same type of pretty much same type of an account with TopStep. If you use TopStep standard without the activation, or with the activation, then this 50K account is going to be $198 instead once you pass it, because there's an activation fee. So you always want to see, what different plans are. Now, for example, Tradeify Select. This one is one of my favorite accounts to trade. It is a 3-day eval, okay, and you need a 40% consistency, and I'll get into that again in a few seconds. But basically, once you pass, so you need only $2,500 profit target to pass for a 50K account, and the drawdown is $2,000. Now, when you get to the sim funded, there is no consistency, and you can choose. So they have two different plans. One is a flex plan, one is a daily, and you can actually pull out pull out your money daily. So it's actually the fastest, one of the fastest payouts out there. 3 days, and then the fourth day, if you meet your threshold, or the criteria, you meet the buffer, you can start pulling out money daily. And then another type of a plan that Tradeify has, and a few other prop firms, is this one's called Lightning, but they're basically straight to funded accounts. And what that means is it's instant funding. There's no evaluation. You basically, whatever you trade in there, you get to keep, obviously, if you meet the profit, the buffer, and you need at least 5 winning days to start pulling money out. So, and there is a consistency, which is 20%. Now, if you can take a look at the other firms, you can add another firm. Let's see. Maybe my funded futures. Can add that. Similar stuff. A lot of these firms have similar rules. So, my funded futures has a rapid account. The difference between this, so it's a daily payout, but the difference between the rapid account and the select on Tradeify is that once you get funded, Tradeify has the drawdown end of day, which is, pretty trader friendly. Whereas with the rapid ones, the drawdown is intraday trailing. So until you meet the buffer, or where it stops and there's a static. So let's see. Yeah, so just kind of, you can sit there and kind of play with this, and add the discounts. This little thing moves to kind of show you. Okay, let's get to some of the risk calculators. So I talked about consistency, and what does that mean? So let's say we'll use the Top Step 50% just to make it easy. Profit target is $3,000. Consistency is 50%. So we're going to click on 50%. Let's say you're trading, and in one day you make, let's just say $1,700. Okay, with a 50% consistency. So basically, no single day can exceed this percent of total profits. So now your total balance needed is $3,400 to pass, not the $3,000. However, if you're trading and you are up $1,500, then $3,000, you're going to be basically under that 50%. If you're at $1,200, then you still need to, you would be okay. So anything under 50, so that's kind of what that, you can go in here and input, everything. You can also go into these for position size calculators. So this is kind of important, account size. Okay. Now, this is a reminder that $100 a day, or 20 bucks a day is a hobby. $100 a day is, like a side hustle. $500 a day is kind of like a job, because at the end, at the end of the year, it's $126,000. So if you go in here in your position size calculator, you input, let's just say you have a drawdown of $2,000. So even if it's a 50K account, you're not going to come in here and put in 50K. You're going to come in here and you're going to put how much of a drawdown you have. So this happens to be 2,000. And let's say you are risking, 2 to 3%. That's very conservative. I personally risk more, but let's just say 5% for, if you have a really good setup. So basically, it means you are willing to risk $100, and that's, oops, sorry. Let's say ticks, 50 ticks, okay? It'll kind of tell you what you should size in. For this account size, you're risking 5% per trade. You should be using 4 micro contracts, okay? And basically, you are risking $100. So if you scroll down, where is it? Oh, right here, account blowout calculator. You can input how many how many losses you can have before your account is blown out. Okay, so how many consecutive losses until you, this sounds funny, until you bust. So, and how many wins to recover. And that's if you're using, a risk to reward ratio of 2. If you're using a risk to reward ratio of 1, obviously that is going to be different. So utilize this, if you're trading options, you guys can also input, position size right here, or if you're trading equities. I'm going to add the crypto as stuff too, but it's important to know how to size in. What I see, and I think what a lot of prop firms see, is people will have a $2,000 drawdown, and let's just say, I don't know, 50 ticks, but they're going to go in with NQ. Technically, let's say even 5%. Even you need to risk at least 15% or more, actually, to use, and that's with one, contract. But I see people, they'll message me, they'll say, hey, I blew my account. And my first question is, how did you size in? Oh, or what size of an account did you have? Oh, I had a 50K account. So $2,000 drawdown. And I used, 2 or 3 NQ to go in on my trades. I don't have to tell you guys what's going to happen and how fast you're going to blow that account. That's just, it's a very aggressive form of trading. So if you are tired of blowing your ports or your, evals, or have a, set daily limit and lock yourself out if you can, or just, close your broker. So you don't need to, just make sure if you're sized in properly, then you should never blow your port in 1 trade or even 2 trades, 3 trades. So just size properly. And I know this might sound a little weird, but you're going to get there faster when you actually size down instead of sizing up and thinking you're going to get to payouts faster. And I've seen it in my Discord, where people will say, what do I do? And then I tell them, hey, size down and, start from there. And that's how they started getting payouts. It's like at first they were trying to, thinking you're going to cheat the system, or, the game of the markets. Well, the market's going to humble you. They're going to humble everybody. They're going to humble me. They're going to humble every one of us. So, okay. Another thing you can do in here is go to the trading journal. You can input, let's see, all trades. You can import a CSV in here and it will, put your trades in here in your dashboard. So for example, like with this one, this is one of my accounts. 21 consistency was 21.8. Typically over the course of the time, trading, let's say over a 10-day period, I tend to be down at like 7% or 8%, which is great because you're going to have days where you're going to have a pretty big day, but then most of your other days should be similar. You might lose 500 bucks, make 1,000, whatever it is. It's not going to be, you know, uh, where your consistency is like 90% or anything like that over a course of period of time. So, um, let's see what else. Oh, prop from health. You guys can come in here and we added crypto a few days ago. If you want to see how your, prop firms or which prop firms to go with, you can go to the prop firm health. This is, basically health scores are aggregated from public data, including like Trustpilot reviews, social media sentiment, community reports, company registration records, and the scores are updated periodically. So, for example, TopStep used to be one of top dog. They've been around since 2012. So if you can see here, the registration shows, 2010. Their score is 92 in that, but their reviews and all of that, rule stability, sentiment has eroded and it's gone down. And that's why it came down to 73 out of 100. And then if you go up and you put in my funded futures and I don't know, let's say Tradeify, for example, it will knock off. So like the difference between the two is that Tradeify lost a few points only because they got established at 2024, whereas my funded futures have been established since 2022. So, just kind of you can look at that. You can also see here where it says rule change. And it will show, like, for example, Lucid Trading, um, had an update yesterday where enhanced cross-account hedging enforcement has been activated. So you're not supposed to hedge accounts, especially during if you're in a funded, SIM funded account. They're not gonna enforce anything retroactive, but they will, going forward, that's kind of what it's going to do. You can see, downgrades, upgrades, that kind of a thing, updates, and then you can also compare, you know, firms next to each other. I don't know, let's say Lucid. So it will kind of show you what the categories are next to each other. Payments 84 versus 84, they use the same type. And then score trends, you can kind of see over time, their points lost. And let's see what else. Oh, trading psychology, risk and trading psychology. So, not only do we talk about position size calculator, but before you take a trade, if you are having trouble figuring out your emotional needs. So like for me, I know if I am at my computer and I am bored, I will end up on a tilt if I take a trade and I have a loss. I don't know what it is about it, but it's like I become even if it's a small loss, like even if it's 20 freaking dollars, there's just something in my brain that it triggers something in me that I'm going to try to make that 10 bucks back. Despite the fact I'm up 9 grand, for example, and actually this happened the other day. And I'm sitting there, I took a trade out of boredom and I was down like uh, maybe 100 bucks. And I tried to size up a little bit to make that 100 bucks back just to get out and lock my account. Well, no, then I was, down even more. And then what happened? I continued in that until and this happens, guys. It doesn't matter how long you have been trading. You will have days where you're going to go on a tilt, whether it's on one account, all of your accounts, whatever it is, where you're going to blow an account because something triggered you. And for me, I know it's when I'm bored. So, and when I come back during lunchtime. Um, so what I started doing is I trade the first 2 hours. Typically, I'm pretty green, or even if I have a loss, it's not going to be that big of a loss. If I walk away, it'll be fine. But if I come back and then I go to Pilates, if I come back and I'm at my desk watching the charts, I'm going to take a trade. No matter how much I tell myself I'm not going to take a trade, if only if I lock myself out is when I can't take a trade. So let's say you are bored and you, I don't know, then you become vengeful. It's going to tell you your risk is elevated. Proceed with caution. You're at an increased risk of, you know, uh, basically blowing your account. Or another thing is being greedy. That's another thing that happens with most traders that I see. Um, for and I don't know if it's because of social media, people are posting their P&Ls and you're looking at it and you're like, oh, this person is up 60K or this person is up 2 grand or $500, whatever it is. Guys, please believe when I tell you that a lot of those accounts are paper accounts. I'm sorry to tell you, but it's the truth, especially the ones that are posting 60, 50K a day. 95% of them are paper accounts. And I call them out and they, of course, are going to block me. But um, so don't sit there and try to compare yourself with somebody else. Now, there are really good traders out there too, so don't get me wrong, who do make 50, 60K a day. However, their port is also probably a couple of $1 million or at least, a million or half a million, whatever it is. You cannot compare yourself with somebody else because they too started with making maybe $200 a day, if even that. So look at the small wins. 300 bucks a day is more than you had yesterday. It's going to pay for the way I started looking at it is, hey, it's, $200 for one account, for example, that's going to pay for my, I don't know, maybe my nails. 1,000 bucks in another account, maybe for my Botox. I don't know. But I'm just saying, split it up like that. It's going to pay your phone bill. It's going to pay your internet bill, and and look at the small wins. Don't try to force and make $2,000-3,000 per account. Every time that I've done that, or gotten greedy where I try to push it even more is when I have given, back. So that's, whatever, little psychology thing. So if you kind of input these, let's say another thing you have is a herd mentality. You're following the crowd without analysis. You can input your little active biases in here and, go into how you sized in, this and that. It will basically, at the end, it's going to give you a dashboard, what your emotional state was pre-trade, and then after, your cognitive biases. But then there's a post-trade review, which you can do the same thing. This is how you will know what has triggered you. It will give you analytics and patterns. So if you are the kind of a person that is going to get triggered when you see, I don't know, a certain dollar amount, maybe you become greedy. As soon as you start having that feeling, walk away, because that, that over and over and over, that same feeling was what you ended up losing your account to. And we're all different. And I know people will say, like, keep the emotions out when you're trading. Well, sorry to tell you, but we're humans, and emotions are always there, whether you're focused, whether you're impatient, whether you're greedy, whether you're confident. Those are all emotions. So that's, what you can do here is kind of play around and figure out your type of, um, emotion. Um, let's see. What did I miss? I feel like I missed something. You can also do a prop firm match quiz. So, you can filter it by budget, drawdown type, minimum trading days, that kind of a thing. It's an AI prop match quiz that will help you. Another thing up here, you guys, you see crypto is added. Tradeify added crypto trading a few days ago. If you guys are crypto traders, be sure to check it out. E8 markets and Hierarch Trader along with breakout prop. So you can go in here and kind of compare your plans. You can compare the two different firms. And there's giveaways too. You can go and check out the giveaways. All right, I think that is it as far as, yeah, there's a DCA calculator too. If you guys are, I don't do DCA typically, but if you guys are the kind to do, you can input that as well. Okay, so did I forget anything? Oh, you can go to Futures Summary here and print and save to give you like a little cheat sheet. What most traded futures are, what are prop firms, what are futures, different tips, rules to verify, with each firm, that kind of a thing. So there's that. All right. Okay. Let me see your guys' questions. Did anybody fall asleep? I'm sorry. I know it's a lot of information. What is a reasonable R to R to set up with 2 to 3 contracts? I feel like this current market is very tough to stay in very long for a big reward. So what R and R do you go with? So with that, I always so I used to have a 32 tick stop loss, which worked really well in a markets a year and a half ago. Then I had to adjust 50 ticks, and then now I had to adjust 70 ticks. And that's for me as a scalper. So what I do is I, will focus on base hits. I think that a lot of people will, they feel like, hey, if I don't get, 100 points in my trade, what's the point of trading? Well, that's not how it works. To me, I will always try to have at least 1-to-1 risk to reward. That you have to figure out for yourself because it's subjective. You might have a 10-point stop loss, 10-point take profit. As long as your risk to reward is more, and I've actually seen people who have their risk to reward is a little off, but you also have to have a bigger hit rate for that. All right, that helps. Okay. Let's see. Any other questions? Whoopsies. All right. So, what other questions do you guys have as far as I think some of the firms are working on stocks are going to be coming up soon too, by the way. I try to trade crypto over the weekend with Tradeify. Yeah, I need to probably learn more. I guess when I used to trade crypto back in 2020 and 2021 and 22, it was kind of like you just buy and hold, Now I feel like I need to look more into it and figure out which pairs to trade. So thank you, Bobby. Any other questions? So I can go ahead and run the, what do you have in place to know when to stop? Do you have a profit target or? So I have multiple accounts that I trade and I try to, I trade copy some of them, but I also try to rotate them. So so if I have a loss, okay, look, it's great when you trade copy. Let's just say, I don't know, 10, 20, 30 accounts. It doesn't matter. There's been times where I've had 40 funded accounts trading at the same time. But what happens if I have a loss? I'm going to have a loss in every single one. when it's green, it's beautiful. You've got a, nice strike of green. So, but what tends to happen is the more accounts that you add to trade copiers, and especially during volatility, there could be trade copiers issues. I have had a lot of times where, because I traded with so many accounts, where it would, trigger one account to go a different way or not close out, things like that. And I've lost accounts because of it. So what I do now is I'll, do them in pairs. Sometimes I'll do three accounts, three accounts, three accounts. Um, Other times it will be, um, five accounts at a time that I'm trade copying. What I do, I I'm a scalper, so I am looking to get at least, so the first hour and a half to 2 hours are my best times to trade, and I try to get as many points as I can for different accounts. I don't really have a set profit target because when I used to do that, like I said, I would go, let's say you need to make $20, and you try to go in and you just to make that 20 extra bucks because you didn't make your profit target. Um, you end up losing even more. So what I tend to do is if I can just take base hits across multiple accounts, it's a beautiful day for me. To pass multi-account evals, let's say 10 accounts, do you have to trade them individually to pass, or one base hit will be times 10? So if you're trading 10 accounts and you are copy trading them, each account is a standalone account. So if you need to meet $3,000 profit target, then each account needs to meet a $3,000 profit target. And you can do a base hit, and then, the next day you do another base hit until you hit your profit target. Does that make sense? Sorry, I'm on like multiple streams. Did Brett Simba, is he still here or did he fall asleep? All right. Yeah, base hits. Yeah. Yeah, because if you look at it, you are spreading risk. So you're spreading risk over different accounts. And, you know, if you total up your, I don't know, let's say you have, I don't know, 10 accounts and you make let's just say $250 per account. That's $2,500 per day on one account. I mean, not one account. That's $2,500 per day. Don't look at it. I think a lot of people will see, oh, well, it's only $250. Okay, yeah, it's only $250 per account, but add them up. How much is it per day? Did you make $2,500 at your job per day? Probably not. People barely make $300 a day at their jobs. So just accept the small wins, other things will come. Let's see. Okay, all right, let me go ahead and run the, uh, what is it called? The giveaway. Just 1 second, guys. Quick draws. Where is the quick draw? Oh, there it is. Alrighty, let's see. I think it's this one. What winner draw failed? Is it this one? Lucas. Is there a Lucas here? Is there a lag on trade copying? It could be very little, but not a whole lot. But that's why, you know, the more accounts that you have, the more that could happen. So, okay, no Lucas. All right, I'm gonna repick. Addison T. Ivan. I'm just gonna keep going through these. William D. Muhammad S. Okay, again, Ivan D. Oh, Moha. All right, there you are. Okay, can you message me, please, on X? Sorry, Fenster. All right, guys. Well, hi, Bobby. That's all. I don't have anything else. Have a great day, guys. Bye-bye.